Jared, thanks so much. So Jared, going through some of the winners. I mean, is Tesla a $285 billion company? Is Amazon worth 1.5 trillion? Is Apple worth 1.6 trillion? Well, I mean, I guess they are. It's their market cap. But let's get real about valuations right now and dig in with Justin Kuzmarski. He's NAV Valuation and Advisory President. So valuations, like this is the top. Everybody wants to talk about this with these tech stocks. What are these companies actually worth? How stretched are these valuations? This is like your bread and butter. So when you look at these companies continue to go higher here day after day, how should we be thinking about valuations? Can you even figure out the valuation for a company when it seems like such a momentum play at this point?
That's a great question, Jen. I think when you really look at a lot of software companies, and a lot of these tech companies are software tech entities at heart, really the key margin is the free cash flow margin or free cash flow growth. You know, companies like Snapchat and Twitter, they lose money quarter after quarter, but they're still valued in the billions. But meanwhile, companies such as Microsoft and Apple continue to generate free cash flow. On a historical basis, even if looking in the past 2 years, tech has surged in the past 3 months alone. We are all well aware of that. I think the valuations are totally out of line for a lot of these companies. Amazon trading at 150 times earnings just a year ago was 74. A lot of the tech companies were trading in the 30s and are inching forward. So I think really from a relative valuation, you know, the stat that people are talking about, a lot of the day traders that have come about since the virus hit, I think that's the safe play, getting to Andy's point, is tech, and that people are applying money into safe plays such as Amazon and Apple.
You think this is a safety trade? These guys are all going to be hauled in front of Congress to answer questions and have a ton of grandstanding, and everyone wants to break up their companies. Is it really? I mean, I get it, but really, are these that safe? Are we forgetting some existential threats to these companies? Not to mention that, you know, in a recession, or we could have some huge global economic shakeup as well.
Yeah, I think it gets back to the point of aligning of interest. I mean, the market is the average retail investor, and obviously a lot of institutions favor tech. But when you look at the three headwinds, I want to pinpoint three. You have California Consumer Protection Act, CCPA. Companies are starting to realize, and states might realize, that tracking customers is really unpopular voters, and we are in a big election year. So Apple a couple of weeks ago eliminated the ID for advertisers. So they're making it harder for affiliates to track. Tracking or covert tracking of user data is the heart and soul of tech companies. Look for Tim Cook in his testimony to talk about how Apple is cutting down on tracking. So the existential threats, slow down advertising, maybe less tracking, these are headwinds. And when you throw in the COVID curveball, there are a lot of tailwinds that tech has not seen that are all culminating in possibly a perfect storm in the days ahead. I think investors should be cautious, particularly given the rich valuations.
Justin, I don't think this is happening anytime soon, but people have talked about breaking these companies up, not Apple as much, of course, as Facebook, into the baby books. I love that phrase. Mm-hmm. And possibly even Amazon, the AWS and retail, Google you could do as well. But and CEOs always, oh my God, you couldn't do that. You shouldn't do that. It would be terrible. Wouldn't that be great for investors, for consumers, for America if they broke these companies up?
I think this is a generational play. It's a great point, Andy. This is almost akin to what happened in the early 80s with AT&T and the Bell offspring. You look at these top five companies and they dominate. You know, they dominate in advertising, they dominate in hardware. I think it comes to the point where you look at Amazon growing 4 or 5%. It's going to represent almost 50% of online sales, all online sales by 2022. There's a legitimate argument. And when you throw in the fact that a lot of these companies play tax strategies with the EU and overseas in Ireland. Obviously, Apple was upheld there. But when you look at the fact that they are shifting jobs and tax dollars overseas, they become a really big target. The 4 or 5 of them, the FANG stocks, for regulators who want to make a claim. Look at DOJ and Barr trying to tie in national security concerns with antitrust. So besides antitrust, tech is really facing tailwinds from a regulatory standpoint. It's one to watch.
Justin Kuzmarski, great to get your take. NAV Valuation and Advisory President. Thanks again.
Thanks again, everybody.